Today's webinar will be on Build and Improve Your Credit History, the Importance of Good Credit for People with Disabilities Seeking Employment. We're really happy that you're here with us today. The audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or prefer to listen by phone, dial 1-855-241-8681, event number 665-814-514. You do not need to enter an attendee ID. Real-time captioning is provided during this webinar. The captions can be found in the Media Viewer panel, which appears in the lower right corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize other panels like chat, Q&A, and/or participants. For Q&A, please use the chat box or Q&A box to send any questions you have during the webinar, and we will direct them accordingly during the Q&A portion. If you are listening by phone and not logged into the webinar, you may also ask questions by emailing them to sbrown@ndi-inc.org. Please note this webinar is being recorded and the materials will be placed on this webpage, www.realeconomicimpact.org/our-work/financial-counseling. If you experience any technical difficulties during the webinar, please use the chat box to send a message to Shahida Brown, Project Coordinator, or email her at sbrown@ndi-inc.org. With that, I'm going to turn it over to my colleague, Ms. Nancy Buteau.
Thank you so much, Shahida. Hi, everybody. Glad to be with you today. I'd like to talk to you for a moment about Empowered NYC. Next slide. Empowered NYC will create, test, promote new strategies to enable New Yorkers with disabilities to, improve their financial stability. This initiative will advance financial capability by offering tailored one-on-one financial counseling for people with disabilities, enhanced with new expertise, outreach, and tools, and providing this monthly webinar training series for service providers like you. Look out for a survey tomorrow. So as all of you know, at the end of our webinars, we have a survey. Well, we have a surprise for you. This month, you will get that regular survey. However, tomorrow, you will get an additional survey. It'll be brief, just like our others. It won't take much time, but it's going to ask you about the last 9 webinars that you were on. And even if you were only on 3 of the 9, or perhaps you were on all 9 of the 9, we just want to get your feedback so when we wind down with our last 2 or 3 webinars that we're meeting your needs and making sure that we're covering all the topics you want to cover. So please look out for that tomorrow. Thank you. So we have many strategic partners. You have heard from them on our prior webinars. We're doing things a little differently today where I'll just kind of do a brief overview of all of them, and this way we have more time for our 2 wonderful presenters today. So our strategic partners, the City of New York is led by the New York City Department of Consumer Affairs, Office of Financial Empowerment, as well as the New York City Mayor's Office for People with Disabilities. as well as us, National Disability Institute, City Community Development, POSA Family Foundation, and an advisory board of municipal offices and disability services providers. Now, we don't want you to think that you're not getting information about those various partners. So what you can do at the end of this webinar, or however you typically access our archived webinars, you can simply archive, get this webinar off of our website in the next couple weeks, and it'll still have all of those slides, probably an additional 7 or 8 slides tacked on to the end of the presentation. So you will still get the information about the Mayor's Office, Department of Consumer Affairs, and others. Briefly, I just want to say that Department of Consumer Affairs, as you know, protects and enhances the daily economic lives of New Yorkers to create thriving communities. I love that. And then within DCA, the Office of Financial Empowerment is the first local government initiative in the country with the mission to educate, empower, and protect New Yorkers so that they can improve their financial health and build assets. Another one of our wonderful partners, the Mayor's Office for Persons with Disabilities, works to ensure that New Yorkers with disabilities lead happy, healthy, productive lives, and part of that is through their NYC at Work project, which connects people with disabilities to meaningful living wage jobs across the 5 boroughs. And then lastly, of course, City Community Development leads city's commitment to financial inclusion and economic empowerment for underserved individuals, families, and communities across the United States. So Empowered NYC, refer your folks to one of our financial counselors. So I just wanted to let everybody know that you can make an appointment with a financial counselor right now. As you can see, the website is up on your screens, and they provide specialized one-on-one financial counseling. Those services are free, they're confidential. The counselors can help the person access their credit report, which we're going to be talking about today. The counselors can also do things like work with you in terms of fixing your credit report. If you have to dispute something on your credit report, they are there at your service for these types of things. They have a deeper knowledge of disability benefits as well, and I think that's really important to the folks that we're sending to the financial counseling, that those who are also on disability benefits are able to be counseled by those that are very familiar with disability benefits. And then lastly, the sessions are available in all 5 boroughs. So we've been getting a lot of referrals, and we just want that process to keep going. So thank you for that. So why are we even having this conversation? Well, this is why. What we hear a lot of times is individuals with disabilities don't need good credit, or they don't use credit. So why do they need it at all? And that they cannot build credit. But we know that's not true, right? In fact, good credit is important. People who have disabilities live in the community, and they have active and complex economic and financial lives. They work in competitive integrated employment. They rent apartments, purchase homes, furnish those homes, maintain their homes, access utilities, cell phones, and internet plans. They also purchase assistive technology, and they access insurance to protect their assets. And having good credit impacts the cost and the amount required on all of these things. So having said that, without any more time, I am going to turn this over to our presenter, Heather Aiello. Heather is the founder and director of the National Association of Certified Credit Counselors. She has developed 6 nationally recognized certification programs, over 15 continuing education programs, and also does consulting for educational institutions as well as public and private entities. So with that, I am going to turn it over to Heather. Thank you so much.
Thank you, Nancy. It is a real honor to be here today with everyone, and I'm excited to talk to you about something that's very important, in fact, to all of us in our lives, is our credit score and our credit report. I don't have the ability to go to the next slide. Hovering. Thank you. Am I going to have control of the slides? Here we go. I have control of the slides. Wonderful. So today we're going to talk about building and improving your credit history, the importance of good credit for people with disabilities seeking employment. We're going to focus on employment, but actually this does affect so many aspects of our lives. But with the focus on employment, I hope that this is also helpful for you to let your clients know how the financial counselors can help them with what can be quite complex but can become very simple if you follow some steadfast rules. So as we're talking about credit reports and scoring, I'm going to get a handle on these arrows, and I think I just did it. They are very important, as Nancy mentioned earlier, with deposits, with so many of the important areas of our lives. So this presentation, we're going to talk about the credit reports and credit scores. And there are different scoring models that we'll talk about as well. How to understand your credit score, what goes into your credit score, how do you dispute errors, how does one improve their credit scores, and understand the role that it plays in our lives, which is quite a big one, and it becomes increasingly much more. This 3-digit number is so imperative to our financial health. It costs us more money if we don't have a high score. It's a barrier to things like employment. It's a barrier to having and getting things that we need, and paying more for things is not something that we want our folks to be doing. So this 3-digit score it's so important in so many areas of our lives. So why good credit is important is, well, one of the first things I mentioned was it costs you more money if you don't have a high credit score. And we're going to look at 2 young ladies that go through life, and they both are going to obtain loans. They're going to do the same. They're going to get the exact same, but what is going to find out is one is, they both have average balances on their credit cards of the same amount. They both get car loans for $20,000. They go and buy their first home, and it's $350. And they're both never turned down for a loan. But the difference we're going to find in these 2, they pay, Monique doesn't always pay her bills on time. She's a little late. She usually only pays the minimum, which is something that we really want to not do if we're capable of not just paying the minimum. She has high balances only on a few cards, and her average interest rate is 19.9. But Rebecca, on the other hand, she pays her bills on time. She always pays more than the minimum, and she spreads her balances across cards, and her average interest rate is 9.9%, quite a difference. Well, one major difference that we're going to find between Monique and Rebecca is Rebecca has a credit score of 750 because of the way she pays. She pays on time, which is, some steadfast rules. When we get to the part where we talk about credit reports and credit scores, it can get extremely complex. We could do webinar all day today, all day tomorrow, all day the next day talking about credit reports and credit scores. But there are some steadfast rules like paying your bills on time and keeping your balances, the credit utilization, we usually want to keep it around 30%. So Rebecca's done these things, and she has a credit score of 750. Monique, on the other hand, has a credit score of 650. So she pays $40,000 more on credit cards, almost $14,000 more on autos, and almost $70,000 more on her first mortgage. This is a lot of money, and I think that gets our attention. So mediocre credit is expensive. It also, think about all the money that Monique went to the lenders rather than to spending on herself. Our finances affect every aspect of our lives, our relationships, our performance at work, our health even. It's very important. So, and also, when you have good credit, lenders compete for your business. You get better mortgage rates and terms. You get auto financing is much easier for you. Business loans, also things like private student loans, credit card APRs are less. And, if you're in the military, in order to qualify for security clearance, they look at your credit report and score. So, and your low score gives you little negotiating power. You pay more in interest. It's a barrier to employment is what we're going to talk about today. High deposits, higher insurance premiums. They actually did a study, which I'm not sure I agree with, but it's a published study, and it says that actually someone with multiple accidents is less of a risk than somebody with a low credit score. So they're looking at it from a responsibility point of view. So employment and the credit check. I got a little nervous. I started doing some research on the different state laws, the federal laws. Boy, that was getting quite complicated. So it's not that they use your credit score always, but they do a credit check. And the difference is your credit history and your credit report, that's a long-standing, that's much more, it's over a larger period of time, whereby your credit score is in constant dynamic fluctuation. It's constantly fluctuating. You could do things that can affect it by 100 points in just one, instance. So that's more of a dynamic, where a credit check is going to give you more of a complete picture. But I'm going to tell you a story. I had the pleasure of meeting Nancy at a conference, and I was there with Sharon. And Cheryl Giovinazzo is one of our partners, and she is the CEO of World Services for the Blind. And I have to tell you, she coming into our lives and our becoming our partner has been just an amazing experience in so many different ways. I could talk to you about that all day. And also meeting Nancy was one of the great spotlights of that as well. Sharon introduced me to Nancy. So how Sharon and I met is really interesting. So that's why we had this immediate synergy of when we met at the conference, and we had so much to speak about, because actually the way I met Sharon is she read an article by the National Disabilities Institute, and she after finding out, she had, I think it was 700, I'm pretty sure it was 700 individuals who were blind. Hewlett-Packard, they had 700 positions to fill. And so they took 700 individuals and they trained them. They passed the interviews, that everything, they could do the job. It was, there was 700. But of those 700, what's particularly mind-boggling is only 15 were hired. And it wasn't because they couldn't do the job, and it wasn't because they didn't have the training. They passed the tests that were required of them, but what happened was they didn't pass the credit check. The Hewlett-Packard had a bar in place, and they did not pass it. So the Society of Human Resources and Management says that 6 out of 10 employers check credit histories. And you can get security clearance. It's certainly not top secret clearance, and you can actually get into quite a bit of trouble in the military if you do end up getting a very low credit score. So it can be a reason for dismissal. So the difference between the credit report and credit score, I think I already talked about that. And I think you'll understand that a little bit better as we talk more about the credit score and credit report. So, it's not just a barrier to employment, but it also, when you go to rent an apartment, they check your credit. You can't get a cell phone. There's so many areas in our lives that good credit is really important. So, and also, as I mentioned before, with insurance, you're going to pay more and probably not get as good of insurance as you would like to, as something else to think about. So your credit score is in a constant state of change. Information is added, old information is deleted. According to the Fair Credit Reporting Act, negative reporting can only stay on there for 7 years. The only exception to that is actually bankruptcy. A Chapter 7 bankruptcy stays on there for 10 years. So, and new information, and the thing you got to remember about the credit score too is, you can't fix it overnight, and be wary of people that use the term credit repair. The financial counselors that Nancy has done this specialized training with, and all the good training that they've had, that they can help you. No one fixes your credit for you. What you want is for them to give you an education. So not only can you get your score up, but you can maintain that as part of your financial health. So sometimes if you have information that's negative, you can maybe take out a loan and pay on time, and the good will eventually outweigh the bad. So it's pretty interesting that, there's different percentage and categories that go into your score that we're going to talk about, and then there's something called scorecards. And we'll talk about the fact that we don't really know the algorithms that go into your credit score, and it gets quite complicated. But there are some steadfast rules that I'll tell you when I go over the different factors that go into your credit score, that if you abide by those, it doesn't have to be as complex as one would think. Okay, so there are hundreds of credit scoring models. And, I'm amazed. I just did a conference not too long ago. There's about 100 people there, and we played a game, and most of them were doing some financial coaching. And they had all different levels of expertise and training. But one thing I found is this was one of the questions. Some people think there's only one credit scoring model, but a lot of people don't realize there's actually hundreds of them. The most popular one and best known is the FICO. And, different lenders and financial institutions have their own models to evaluate applicants, too. I want to say that right up front, too. But if you're going to go for a mortgage, FICO is usually what they're going to pull. And it's really interesting because FICO, I think they're up to 9 now, so they're up to 9. And when you look at it, you get really complex into what is going on with that score and the subtle differences as they change them from year to year. Why don't they want you to know what completely goes into your score? Because I think it loses its validity. There's a lot of different reasons. They use it as a predictor for all different things, and I think I'll talk a little bit about that later. But the 3 credit bureaus got together around 2006, and they decided to introduce this Vantage scoring model. And they've actually evolved that to look more like FICO since the introduction of it. And I'm going to tell you about the subtle differences, the factors that go into your credit score when we get to the part about credit scores. But so the 3 credit bureaus, so what's important to know about the differences between Vantage and FICO is if you go and you get a FICO score, there's actually different types of scores, too. There's for the one that they pull for auto, the one that banks pull, the ones that they pull for mortgages. But, there's the steadfast rules, of course, I'm going to talk about. I don't want to get too much on a tangent. But there's subtle enough differences between FICO and Vantage that sometimes the score can be 100 points different. So I think it's important to know that when you go to a site like creditkarma.com, they're pulling a Vantage score from TransUnion, and that could be quite different than your FICO score. So you might be going out looking for a mortgage thinking you have XYZ score, and come to find out they pull and that's not. So it's always a good idea, too, to ask lenders, which credit reporter you're calling. There's 3 credit bureaus, TransUnion, Experian, and Equifax. And the reason you usually want to pull all 3 credit reports when you pull your credit reports is the reporting can be different on the different credit reports. So it's very important to be aware of that as well. What's reported and who's reporting to which credit bureaus can be very important. So your score is designed to do this. It's to forecast whether you're going to default on your mortgage, your auto loan, your utilities. How much you're likely to pay towards a delinquent account. Predict if you might close a credit card. And they also use this very much, and I know probably all of you have gotten the credit card solicitations in the mail. Whatever type of solicitation you can look at your solicitation and pretty much get an idea of what kind of credit score you have by what they're offering you. And in the Truth in Lending Act, they have to disclose, the APR, the method of financial calculation. So it's important to know, that information going into getting a credit card as well. It also predicts whether you'll file bankruptcy. They use it for a lot of different things. So let's talk about what you'll see the FICO on the screen, and I'll tell you the subtle differences and what Vantage uses. And like we said before, these are the most popular scores, but there are many credit scoring out there. But this I think gives you an idea of what to look for when you want to be financially healthy and keep your credit score as high as possible. So 35%, which is a very large percentage of the pie, kind of visualize a pie in your mind. Okay, so we've got this pie, and then 35% is your payment history. So obviously, if you pay your bills on time, we're good. How much you owe. There's a lot of debate about this, but I think I could say with a lot of certainty. Okay, let's say with a lot of certainty that if you keep your credit utilization around 32%, you're always going to be good. So interestingly, most people don't realize that if you have XYZ amount of, let's say you've got $1,000 in your line of credit. So you've got $1,000. So if you use all of that $1,000, that's going to lower your credit score. If you don't use it at all, it's going to lower your credit score. But, in order to have credit, you have to utilize credit. To have good credit, I should say, not just to have credit. And actually, interestingly enough, when do you have a credit report? You have a credit report when you ask for one. So that's when your credit score, your credit report begins, is in the onset, is you requesting credit, and that's when you have a credit report. So I read this article one time about a woman who had never used credit her entire life, and sadly, her insurance rate was higher than that of an 18-year-old boy. Okay, so how much you owe? And for the Vantage scores, it is 32% for payment and 23% for utilization. Your credit history. This is about 15%, and for Vantage, it's about 13%. And it's important. People think, I'll improve my credit score by closing a credit line. That's not true. That might have been your oldest credit history. You want to be careful with that. So inquiries. So there's soft inquiries and there's hard inquiries. A soft inquiry does not affect your score at all. A hard inquiry does. So if you go to annualcreditreport.com or you request your credit report and score yourself, or your credit report yourself, that is not going to impact your score. When they give you offers and they pull your credit, that's a soft pull. But when you give someone permission to pull your credit report, that would be a hard pull. So this is to have a healthy mix of credit. Have revolving accounts, credit cards, have installment accounts, car, mortgage. And so for FICO, it's 10%, and for Vantage, it's 7%. All right, so here's some good news for maybe some of your people that you work with. And this is the kind of things that the financial counselors would know too. Okay, so medical bills. This is something that a lot of your clients may inquire. So now they've made this new rule that they cannot report to the credit reporting agencies for at least 180 days, because sometimes there's point of time when the insurance, doesn't kick in. So, and then unpaid medical bills that are later paid by your insurance must be removed. Very good news. Very good news. Credit Access and Inclusion Act. This has passed the House, and this is really good news. So what the important part of this is, it's looking at people who don't have credit or don't have the ability to go and get a credit card and start, building their credit. So they're going to assist millions with credit scores by including your rental payments, utility accounts, and I think this is a really good thing. This is a great thing that's been passed, the removal of tax liens and judgments. What's important to know about this is they've been taken off, but they don't go away. So they're still on public record. You could still be garnished, but the fact that they don't affect your credit score anymore is good. So getting your credit report, you can get it through the mail. You can call them. Probably the most easiest and most popular way now is to go get it online, of course, because that's what we do. So this is what's in your credit report. This is where they get their information, and the creditors choose who they subscribe to. Public records, bankruptcies, lawsuits. All of this is on your credit report. These are the 3 credit reporting agencies, and this is where you go, annualcreditreport.com, to get your 3 free credit reports in each 12-month time frame. And I encourage you to be wary. Make sure it is actually annualcreditreport.com, because there are a lot of sites out there to try to make them so. If they ask you for a credit card, that is not this site. So that's an important thing to definitely remember when you're pulling it. So you pull all 3. I already talked about this because there might be different information in all 3. Here's what you'll find, identifying information. There are quite a few errors in credit reports. Usually only 30% actually, affect your score. A lot of times the errors are your name, your address, where you're employed at the time if it's not kept up with. So trade lines, these are the different accounts that you have, the date you opened them, your balance, how you paid, have you been 30, 60, 90 days late? And there's subtle differences in how the credit reporting agencies have this denoted, but they usually have some good explanation. And I'll tell you, 3 really good resources for really understanding credit reports and scoring are Equifax.com, TransUnion.com, and Experian.com. They really have excellent. And if you need any information, too, about the Fair Credit Reporting Act, FTC.gov, disputing errors. FTC.gov, I tell you, is a fantastic website. Not only does it tell you what your rights are, how to utilize the federal consumer protection laws that are in place, but it gives, a lot of people are intimidated by processes. It even goes as far as to give you a letter that you just put your name in. I'm disputing XYZ because of this reason. It's not mine. It was paid, whatever the reason may be. So at least once a year, and you really definitely want to check your credit report if you're making any big life changes, going through a divorce, buying a home, buying an automobile. You want to have, knowledge is power. You want to have the power and the knowledge when you're going out to get extended credit. So you want to watch for all of these things and for errors in your credit report. These derogatory that are not yours. A lot of mistakes can be made. Since they've been sued, the 3 credit reporting agencies were all sued, they're much better about taking care of this. If you dispute something, they have 30 days, and you actually have in which to get back to you, and they have to investigate the errors. So here it is, FTC.gov, I already talked about that. The Consumer Financial Protection Bureau. Wow, this is another one of those sites. A wealth of information, really good information that we all need, actually. And this, you can submit complaints, and this is the way they find out what needs to be done, is through people actually going and utilizing the site and utilizing the fabulous resources that are on there. This is how you can improve your score. Pay down your debt, keep that 32% utilization that we talked about. Don't ever move that, moving balances around from another car that, you open up the 0% interest. The 0% interest, and then you move your balances around. Be really careful with that. Really careful with that. And like we talked about before, it's dynamic. You walk out on a stage, there's some fluctuation in your credit score. And, it's just know that it's not going to improve overnight, but with due diligence, you can definitely improve it if you do have some challenges with it. Okay, so if you close accounts, that credit utilization looks at all the accounts that you have open. So you want to take that into consideration. How much credit is extended to you? If you have too much credit extended to you, that's going to affect your score. Because a lot of people think, oh, well, I have all this credit and I'm not using it. Well, it's there to use. They want to see good, responsible behavior. I talked about this before. Careful of closing your oldest account. And it's not a good idea if you have a credit card and you're just not using it, period, like we talked about. First of all, the credit utilization and, okay. Yeah, so there's a point. Like, there are some things that we don't know. Like, we don't know the algorithm. We don't, they change things year to year. So, but the steadfast rules, pay your bills on time, credit utilization, keep a credit history high. If you do all of those things, you're definitely. And, there's so many good calculators online where you can predict, if I do this, is it going to improve my score? There is just a wealth of information now about credit scores and credit reports. But you do want to make sure you get it from the best resources. And we've talked about a lot of the best resources already. FTC.gov, the Consumer Protection, the credit bureaus, FICO.com is a good one. And disputing errors can be difficult. Well, there's some debate, too, about doing it the good old-fashioned way with certified mail, because then, you have a paper trail. So a lot of people say, oh, keep doing the paper trail. Some people say, well, the ease of doing it online. So you can do it all online, or you can, or you can do both. But be persistent. Be persistent. So we've talked a lot about credit reports and credit scores today. And, it's an important factor. We want to have a purpose and be employed and be financially healthy. So I think with all of that said, I really enjoyed speaking with you today. I hope it was helpful. The beauty of what we teach at National Association of Certified Credit Counselors, it's really important information for everyone, not just consumers in financial distress. We're all constantly learning. That one thing I can say about this industry is it's dynamic. And you could pick up any newspaper or go online. Every day there's articles that relate to what we do. And what we do is we try and empower those that empower others to be financially healthy. And I thank you so much for your time today. I've enjoyed it. I'm not sure how I'm doing on time. I think I'm really good because I think Lori's going to be speaking with you next, and I am really looking forward to hearing from Lori. Thank you so much again.
Thank you so much, Heather. And we do have some questions that we're going to hold off till the end. I'm right now going to introduce Lori, and I just wanted to give some people a reminder. I see there's some people in our chat that have their hands raised, and we're unable to answer questions that way. So if you do have a question for us, please put it in the chat box, and then we will be able to answer your questions there. So having said that, Heather, thank you so much, and I'm now very pleased to introduce Lori Schaller. Lori works at National Disability Institute, and she is going to talk to us about good credit for people with disabilities seeking employment. So Lori, thank you. I'll turn it over to you.
Thanks so much, Nancy. And Heather, thank you for laying the foundation for credit knowledge. So this idea of developing good credit, it's never too early to start taking steps towards developing good credit. And if it's also never too late to turn credit around and improve it. And in fact, you know, people maybe who worked on developing a poor credit over years and years and years, often it takes less than 3 or 4 years for that person to improve their credit dramatically and be competitive in credit scoring. So every interaction with our clients or beneficiaries can become a good opportunity to talk about their credit history and share tips for how they can improve their credit standing. So of course we want to meet our clients where they are, maybe ask if they had extra money, where would they want to be spending that extra money? What is their financial goal? Ask them, have you checked your credit report recently? Did you know that you can get a free copy of your credit report? And do you know your credit score? Knowing that credit score empowers that individual to be able to walk into a store and tell that person what interest rate they want to pay if they're going to utilize a line of credit. And parents, educators, employers, case managers, representative payees, guardians, financial educators, and financial counselors can all play a role in supporting people with disabilities as they take steps towards managing their own money and developing good credit histories for themselves. And this idea of establishing good credit, it can all be done without costing money. Or if it costs something, it could be a very little bit of money. So a person can try to reduce their monthly expenses and set aside money at the end of each month. They can use this money to pay back the amount they borrowed on credit card, for example. Timely payments can help you to develop credit and improve your score. People can ask their landlord or subsidized housing counselor to report their timely rent payments to credit reporting agencies. There may be a slight fee for this service. Then there are alternative financing programs in almost every state across the United States, including New York State. And these programs offer credit building loans for people to be able to purchase assistive technology. So that could be a hearing aid, it could be a modified vehicle. It could be business equipment for that individual who has a disability. And many banks and credit unions offer secured credit cards for credit building opportunities. And the APR on some of these cards, I'm finding, in fact, is very affordable, maybe 2 or 3%. They're trying to help us to develop that good credit history. So when we're looking to employment and we're concerned about perhaps our credit history, there are programs that help that individual to secure employment so that they can earn money to be able to improve their credit by paying their bills on time each month. So the Department of Labor and Access VR provide federal bonding for job applicants who have credit concerns or other potential barriers to employment. The bonding covers the first 6 months of employment. It's really an insurance policy. And this is free for the employee and the employer. It is great for individuals facing barriers to employment, and it supports both full-time and part-time employees. It's a win-win for employers and candidates. And this is an insurance policy that helps to open doors to employment. So to learn about this program, a person can go to http://bonds4jobs.com/. More ways to access your credit score. So check your credit card, or other loan statement. Many major credit card companies and financial institutions have begun to provide some of their customers free access to one of their credit scores. Check your online account portal or mobile app to see if you already receive free access for these services. To talk to a non-for-profit credit counselor. So, you know, I've met people as a credit counselor. They come in, they've got, you know, perfect credit. They want to learn how to develop that credit further and how to make major purchases. Maybe that person is newly married and they're trying to figure out how to manage money with that new partner. So or maybe a person would come in and meet with me. Their goal was to go to college. What steps can that person take now to improve the likelihood that they're going to be able to access financial aid and perhaps a student loan? So non-for-profit financial and credit counselors and HUD-approved housing counselors are available at https://www.consumerfinance.gov/find-a-housing-counselor. And they can often provide you with a free credit report and help you to read that credit report and identify steps to improve your credit from there. Companies that offer free credit scores to the general public are Credit Karma, Chase Credit, Journey, and Discover Credit Scorecard. Although these companies may offer this service at no cost, they may require you to register and enter personal information online. Afterward, they may also market products to you. That, for example, they might offer you a credit card. So we are empowered, of course, to say no when we are offered opportunities that we assess and we decide will not help us to meet our financial goals in the future. So we would like to encourage people in terms of taking action steps. Encourage individuals to request their free credit report. And having that, then they can take that to a credit counseling agency and review that and assess where they are today, talk about their goals towards employment, and that credit counselor can help that individual to prepare a spending plan to be able to identify the extra money that will be left over at the end of the month, or maybe how much that person really needs to earn in order to reach their financial goals and take steps to improve their credit. So online, a person can visit annualcreditreport.com, and by phone they can call 1-877-322-8228, and deaf and hard of hearing consumers can access the TTY service by calling 711 and referring the relay operator to 1-800-821-7232. Please share information regarding how to access one of their credit scores, and that's available at https://www.consumerfinance.gov/more-ways-access-credit-scores-free/.
Thank you, Lori.
Thank you, Nancy.
Lori, thank you so much. What wonderful information. And I think you gave us a tiny little taste in terms of what we are going to be talking about next month, and that is going to be housing. And we hope to have a couple presenters, one from NYCHA to be able to talk to us about housing. So I'm glad that you said that. And of course, everyone on the phone knows. I'm sorry, could you go back one slide to action items? Whoever's able to move the slides. Great, thanks. So just letting everybody know that the counselors in this project are also able to do the exact same thing. And as Heather mentioned before, they're also trained with disputes and some other things. So I just wanted to let everybody know that. So in terms of some additional action items, please refer the folks that you're working with to one of our financial counselors. As I said in the beginning of the project and talking about it now, they're the folks that can help you access your credit report for free. They can also share with you what your credit score is. They provide counseling services that are free and confidential. And most importantly, in my mind, is that they are trained significantly in disability benefits. So they understand the Social Security Administration, they understand the SSI program, and they understand the SSDI program. And I'd like to stay on that topic for a minute and talk about the importance of that. Heather did a great job talking about how employers do credit score checks. Some employers absolutely require it, and then with others, sometimes it's just not necessary. But what New York has done is kind of put some safeguards in place so that an employer can't use somebody's bad credit score to kind of rule them out as a candidate. Now, again, there are some places, if you're going to work at the Federal Reserve, let's say, whether it's in New York or somewhere else, you're certainly going to have to go through some type of a credit score and significant background check. But in general, in New York City, employers cannot run a credit check on you on the basis of hiring. So that's important to know. They're also not allowed to ask about your payment history or your credit worthiness. That is not allowed. And then also, you need to know that this pretty much applies to all New York City employers, unless it's a very, very small employer with roughly 3 or 4 employees or less. In that case, unfortunately, they can check your credit score. But just know that employers, you know, are still allowed to ask about a credit history, do a credit check in those types of situations. So I just wanted to clarify that a little bit. Every single state is different, but New York has put some safeguards in place where if a credit score is not required, then they are not allowed to access it. So having said that, I am going to move on to contacts. If somebody could move the slide, please. As everybody knows, you can contact me. You can contact Wanda or Crystal or Abby. We are more than happy to answer your questions and give you any information that you're looking for. And having said that, it looks like we have about 7 minutes left, and I do have some questions for individuals. So Heather, I am going to start with you. And the first question that we have is, how long does it take before I start seeing improvement in my credit score?
Wow, that is the million-dollar question. And there are so many variables that go into that, and I really don't want you to think I'm not answering your question, but without knowing your full picture, it's difficult to put a time frame on that. So that all the different variables that go into your particular situation, you know, do you have negative reporting? Do you have a bankruptcy? You know, all of these factors come into play. But diligently offsetting the bad, I would say, you know, 6 months, a year. It's very difficult to say because we'd have to know all the information about your particular situation. You know, how long is your credit history? You know, what happened, how if you want to improve, though, those steadfast rules that we talked about, looking at how much credit is extended to you, your utilization, paying your bills on time, go online, and there are some, like with a lot of the Discover site, I think, and the FICO site, you can use those predictors, and they'll give you a really good idea.
Great. Thank you very much. And the next question is for Lori. And Lori, I think that you also hold all the technology in your hands right now. So if you wouldn't mind moving us to the question slide, great. Thank you so much. And then the question that we have is, where is the best place to go to get a secured credit card, a bank or a credit union?
Oh, that's a great question. So wherever we go to purchase a product, we want to maybe write down a list of questions we want to ask. So I would go to one of each at least and ask a bank and a credit union the same question, see how they respond, see how much they would charge perhaps for a secured credit card, what suggestions they may have for us. In many cases, banks and credit unions are pulling our credit reports even prior to their offering us a checking or savings account. And if concerns come up regarding that individual's use of a checking or savings account in the past, they can also include a question, does that financial institution, that bank or credit union, offer a second chance account where that person can show that they can make deposits and manage that money more carefully than they had in the past?
Thank you so much, Lori. Appreciate that. And I've got another question for Heather, and then in a moment, Lori, I'll ask you to go to our final slide. So Heather, our last question is, what is the difference between a hard pull and a soft pull? And can a hard pull ding my credit?
Yes, and actually that is the difference between, that is exactly the difference between a soft pull and a hard pull. A soft pull isn't going to have any effect on your score whatsoever, but if you go out and say you apply at all these different places and all these inquiries end up, as I said, it's 10% of your score. But do know that when we shop for a mortgage or we shop for a car, of course you want to go and make sure that you're getting the best interest rate, the best terms, and all of that. So there is this window period. I would definitely keep it. There's a little bit of debate about that, about how long that window period is. So I would keep it as short as possible, like 15. Try not to get all the way to the 30 days. If you're shopping for a mortgage or shopping for an auto loan, they will be counted as one hard inquiry. I hope that answers your question.
It does beautifully. Thank you so much. Well, I want to thank both Heather and Lori again for joining us today. I think this has been a phenomenal webinar, and we greatly appreciate the information. Please join us for our training next month. We think this is going to be a big hit for our providers. It's going to be integrating financial capability strategies into your disability programs. So what things can you do that might help your employment programs or other programs to be able to have better outcomes through introducing financial capability strategies into your program? So that is next month, Tuesday, March 12th, 1 to 2 p.m. There's our registration link right there. And please remember to take our survey. You will get one as soon as you exit out of this webinar. And then don't forget, you're getting a surprise one tomorrow as well. So thank you all very much. Have a wonderful rest of your day and rest of the week. And we'll talk to you next month.